Hello and welcome everyone to the Commodity Report for the 9th of September 2022, presented by myself, Phil Carr at the Gold and Silver Club. So this week we have indeed seen platinum surge over 8% to the upside. Silver prices have had a slingshot move higher by over 4%. Today, in fact, we had gold prices, they broke out to $1,728 per ounce. So we talked you through this at the start of the week, that commercials have flipped into net long on both platinum and also silver. It's only the third time in 20 years that we've seen this occur. And with that, over the course of this week, big move higher on platinum. We've, of course, benefited off the back of that. We have two positions on platinum. At the moment, we banked 440 points on one of our platinum trades today, just ahead of the European Central Bank announcement, and indeed on gold, where we sniped in sub $1,700 per ounce. We now have 5 trades on gold. We again banked more profits on the breakout today, up to 1728, ahead of the European Central Bank announcement for 330 points profit, and took the opportunity on the dip yet again later on in the session to accumulate another position. So we've stacked nicely here into the metals. In fact, in total, alongside our copper trades, our silver trades, our platinum trades and our gold trades, we have 12 positions at the moment on the metals. Every single trade that we have on the metals is currently in profit, and we've talked you through all of these trading opportunities as well, particularly over the course of this week, to anticipate that the European Central Bank would go ahead with the 75 basis point rate hike. As we mentioned to you on Tuesday, that's exactly what has played out. All of the usual playbook here, with the breakout that we've seen later on in the week with the metals and the great buy opportunity at the start of the week, as we had the public holiday on the Monday in the USA, leading into opportunities to buy the dip on Tuesday. Everything that we discussed with you, the opportunities to capitalize and buy in at the lower end of the channels, that has all come to fruition and given us an opportunity to yet again bank a windfall amount of profits with our clients at the Gold and Silver Club. So now what else can we expect? Well, going into next week, we're going to have the CPI data on Tuesday, and then also on Thursday, we had the Bank of England interest rate decision as well, where essentially they are also expected to go ahead with an aggressive interest rate hike, and this could further propel, of course, the pound off the recent lows, where it broke down to the lowest level since 1985. The euro has just about managed to get back above parity. We saw the dollar index at the beginning of the week break above 20-year highs, but it's now starting to pull back a little bit. Treasury yields are also starting to roll over a bit here as well. The gold-silver ratio, it hit 96-1 at the start of the week. It subsequently started to break down, as we're now seeing silver in the short term outperform gold in the last week. Everything that we've been anticipating with you. So what sort of opportunities are going to be presented in the coming days here? Again, the same playbook, essentially, as I mentioned previously, that you want to be looking at opportunities to accumulate and sniper in at the lows. Then when we get these slingshot moves higher, same way that we've seen off the European Central Bank announcement, essentially platinum has broken out over 720 points now since last week on Thursday, just 1 week. This gives you tremendous opportunities to get in nice and low and then bank on these surges to the upside that we're regularly seeing. Also next week, we have a public holiday in China on Sunday through to Monday. So again, in thinner liquidity, this may see more exaggerated moves in the market, which then brings me over to oil. So we have oil right now, which is trading close down towards $80 per barrel. These are the sort of levels of interest for me at the moment as we go into next week. Typically, you can see oil get a bid at the end of September. I'm looking again to accumulate at the swing lows, especially if we were to get a revisit back down towards that $80 per barrel level. At the moment, we've got oil, which is trading around 81 up to $83 per barrel. But especially as we go into next week, if we do get any further pressure to the downside, especially off the back of increased lockdowns in China, which can often put short-term pressure on oil, there may be opportunities to sniper in at the swing lows in the coming days as well. But again, the major news item to have on the radar going into next week is going to be that CPI data, as we discussed with you on Tuesday's report as well. On gold asset of the day, gold a gift under $1,700 per ounce. It broke out to 1728 on Thursday, and silver a gift under $18 per ounce. It's broken out to $18.65 per ounce on Thursday. So again, all of this we talked you through in detail. And again, this comes down to utilizing a research-driven approach in the market. If you're not making money at the moment in these markets, you absolutely should be. I can only think the reason that you wouldn't be making money, you don't have the right strategies in order to benefit from the current market conditions, or you're using outdated technical analysis, gimmicky indicators which just will not work in 2022, the age of data, where you'll just end up getting chopped up all the time. You'll keep getting FOMO, buying the top of the move, and then get liquidated on the pullbacks that we see regularly in these markets with the volatility. It will just end up being death by 1,000 cuts. And we don't want that for you. This is where you want to be utilizing statistics, data, market intelligence, further compound that as well with the narratives in the market, the fundamentals, the macroeconomics. Alongside that, the key areas of liquidity, the intermarket correlations in the market. Alongside that, the capital flows, the key areas of liquidity. Learn and understand the daily, the weekly, the monthly, the quarterly cycle for each commodity, and further compound that with how the hedge funds, money managers, banks, institutions, and commercials are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.